Welcome on into today's video where we're going to be covering charting stocks for beginners. We're going to be giving you a step-by-step guide to go from zero to hero, or at least beginner hero, when it comes to charting stocks, doing your own analysis of stocks, and what you actually need to know. There will be a video going a bit further into depth that will be more so how to do technical analysis. We'll cover more of the patterns, the candlestick patterns, and the aspects to trading that can give us signals to what may happen next. That'll be more the next step in the process. That video, if not already on the channel, is coming out very, very soon, about a week or less from when this one comes out. So first things first, we are looking at a chart of SPY, the S&P 500 ETF. And this chart might have too much. It might not have enough, depending upon where you're at or where you will be one day in your charting careers. But this is kind of an example of a chart that I am actively using, basing off of key levels, basing off support, resistance, indicators, and trends that I like to follow myself. And so what we're going to do here in today's video is we're going to get you to a point where you can do things like this to your own charts that are going to be useful. Because the whole point is that it needs to be useful to you, not to me, not to somebody who's looking at it that you're sharing with on social media. It needs to be useful to you because that's what matters. Cancel the noise. It only matters what you see. So first things first, we're going to walk through a couple different steps. There's like 5 different steps that we're going to get through, okay? By the 5th step, we'll talk a little bit about indicators, and then we'll have a really good base for where we're at. So we're going to kind of build up to that indicator standpoint. And then hopefully, at that point, you're going to be in a really good spot. Now, first things first, we got to have a charting platform. Okay, so if you don't have a charting platform, you can't chart stocks. Okay, so Robinhood's probably not going to cut it. You look at Yahoo Finance, probably not going to cut it. Google's homepage, when you look at stocks, probably not going to cut it. So you got to have a platform that allows you to customize your charts, allows you to draw things on your charts, allows you to do whatever you want on your charts. And this platform right here is TradingView. I will leave a link to TradingView as one of the first links in the video description box down below. If you want to follow along, there's a free version. I pay for like the highest level, the premium version. It's up to you as to what you find value. They have even free trials, so you can even trial the premium version. So I would recommend, like I've said, there's actually a video on this channel already in the past, like what plan is best for you. The free version, 100%. I never want people to have to pay more money for stuff. I really think it's a terrible way to go into things. Like, this community and trading the world in general, the investing space is like, pay me to teach you how to do this so that you can make money. No. If you find value in what they're going to teach you, sure, go ahead. But that's not the answer. That's not like that, that's not the end all be all. That's not the reason why you're going to make money or not, right? It's not, but really it's not. But here's TradingView, Webull, TD Ameritrade, other platforms out there, E-Trade, there are other platforms you can do great stuff like this. Don't feel like you have to just use a separate platform. For me though, I found this to work best as I've asked the questions, how do I get this indicator? How do I do this? And then also for educational purposes, being able to draw on this guy is really nice, and it makes it very easy to visualize and show what I want to show on my charts and in videos. So that's why I pay for TradingView. Okay. Let's get out of this S&P chart. Let's go to DIA. Let's look at the Dow, and let's clear up this entire chart. I didn't really have much there. I got some indicators. I got some stuff that we can kind of get rid of as well. Let me get rid of this blue and the orange moving average indicator, and we'll walk our way through here. But first things first, we need a stock chart. Now, number 2 is we have to look at a stock chart and be able to derive more information from a stock chart. So you can, of course, look at a line chart if you wanted to. And at the top of my TradingView platform, I'm going to change this chart over to a line chart. And this is what you're probably going to be very, very familiar with if you watch CNBC, if you look on Google and you see charts like this. Now, this is cool. And to be honest, like this could be enough for someone, like it might. But if you're trying to derive more information, that's why candlesticks, I believe, and I think a lot of other technical analysts and those chartists out there will agree that you're going to get more data and a better story, a better picture of what's actually happening when you look at candlesticks. So that's what we're going to start with. But before we get into candlesticks, let's talk about time frames. So let's just kind of go from the time frames to the candlesticks and then into the more detailed aspects of charting stocks, okay? So time frame, we are looking right now on the bottom of my screen. I can change the time frames. I'm going to go to the 1 year. This is going to give me a look of the past 1 year on the Dow. This is DIA, the Dow Jones ETF. This shows the past 1 year of the Dow. So now when I'm charting a stock, I need to know my time frame. So if I'm an investor, do I care about a 1 minute chart where each of the candlesticks are like, here's a 1 minute chart, a 1 day chart. This is what happened the last trading day on the Dow. Do I care about what happened here? No, I really don't. I really don't. I want to look at the past 1 year. Maybe I'll go to the past 6 months, but I want to look at the past 1 year. And the past 1 year, I can at a minimum derive what happened the past 6 months, the past couple months by looking at the bottom of my screen to go by the month and the dates, and then looking at the price axis and seeing, hey, what did this thing do over this past year? How big of a range did we have? How is it done as of late? Where is it compared to where it began, and what happened? So we pretty much had a downtrending year. Finished quite strong, but a downtrending year on the Dow. If I am an investor, I might even look at bigger time frames than this. Like I might look at the past 5 years on the Dow. I might look at the past 20, 30 years on the Dow to get a really good feel for where we're at. And when we see pullbacks, how big can they be? So on the Dow, like, yes, we pulled back this past year and hit down to here, but on the grand scheme, based off of prior big time drawdowns and corrections, it's actually not, it wasn't as bad as maybe, it felt. It just took a long time. So if I didn't buy that opportunity, I might look and say to myself, you know what? I'm not super pissed because throughout history, throughout big picture, from an investment standpoint, we didn't get a humongous crash or a humongous drawdown for years that we've seen early 2000s, and then of course 2008, late 2007, 2008 through 2009. We got a decent drawdown, but it was kind of controlled. So I might look at this and it gives me a good picture, right, of what's going on. And of course, buying the dips in the long term, right, are a great proven strategy in the stock market. Of course, that could change one day, and we might go through a bear market, or we might go through a choppy period for 10 years, 20 years. But when you look back, you much rather buy on a day where the markets are down, if you're an investor, than buy when the markets are up, right? So that's what I need to understand, right? What's my time frame? If I'm a trader, if I'm trying to swing trade or even day trade, then I need to know, I got to zoom this guy in, okay? So I got to zoom this chart in. So if I'm a day trader, I'll look at the daily chart, and then I'll go into like the 1 month chart. What have you done for me lately? A lot of consolidation. Then I'll go into the past 5 days and say, okay, where are the key levels that I got to risk off of, and where are the spots I got to watch in terms of support resistance, which we're going to cover here as the video goes on. Okay, that's a good tidbit on time frames. You got to have context. Now let's get into the candlesticks. So if I go to candles right here, I personally like to use hollow candles, and I'll explain why in a second. But let's go with candles. So there are some videos, I think, on this channel and other channels that you can find, full in-depth guides on candlesticks. But we're going to cover that in a much more condensed format to give you what you actually need. Jot these things down, because if you don't know candlesticks, jot this down, because it's going to be super helpful. You're going to get in and you're going to get out with what you need to know, so that when you see a candlestick chart, you know what you're looking at. The general trends and stuff are relatively the same, but when I see a candle, I can customize the colors on TradingView, which is kind of cool, whatever, but that's besides the point. And I look at this chart, let me zoom in. If I'm looking at a candlestick, and let's look at some of these guys over here, these bigger ones, because they're easier to kind of talk about because they're larger, we can see. This green candle. Green means up, red means down, okay? Of course, you can change the colors and whatnot. Hollow candles are different, and I'll explain why. So a green candle means that at the bottom of the body, so the body of the candle, guys, is the thick part of the candle. The wicks are those little smaller points at the top and the bottom of these candlesticks. Those are wicks. The body is the solid color, okay? At the bottom, the bottom of a green candlestick, solid body, that's the opening price of that candle. And in this scenario, these candlesticks are 1 day. So that was the opening price. The bottom of this green body right here back on November 30th that I'm kind of looking at. This right here was the opening price on that day. The stock market opened and boom, the Dow Jones opened, or the Dow Jones ETF opened at that price. Okay. The top of a solid body. Okay. So the top of that solid body is where, or right up here, is where it closed on that day at 4 p.m. Eastern time. So at 9:30 a.m. Eastern time, it opened the bottom of that solid body of a green candle. At the top is where it closed of a green candle. So green means up. That means that we open at the bottom, close at the top of a green candle. What does a red candle mean? The opposite. A red means down. So we open at the top and we close at the bottom. So this red candle right here, on this day, we open up here and we close down here. What do the wicks mean? The wicks, these kind of skinny pieces of the candlestick, indicate the intraday range or the intra time frame range. So in this case, it's a 1 day. If it's a 1 minute chart, right, at the beginning of that 1 minute time frame, it opens here, closes here, if it's green or red, right, up or down. And the wick just says, did it have further range above or below the opening and closing price? So all that the wicks mean is that on a given day, for example, this day right here, I'll circle it. It's not the best circling job, but here's what I'm going to circle, this candle right here. So we open here, we close here, it was a down day. Yet we had range all the way up to here, as indicated by the top of the wick was the high of the day. The wick, the top of the wick is the highest price point that traded on that day or that candlestick time frame. And the bottom of the wick is the lowest point that the stock or whatever the ETF traded on that time frame or that day in this case. So that's all that it means. Top of the wick, top of the range, high of the day, bottom of the wick, low of the range, low of the day. Okay? And the body, bottom of the green body, open, top of the green body, close, top of a red body, open, bottom of a red body, close. So guys, that's candlesticks in a nutshell right there. Now, if I was to go to hollow candles, a different story. Because, well, yes, green candles and red candles are cool to say, okay, was it up or down, right? That doesn't necessarily mean that the candle was up compared to the prior candle or the prior day. That's why I like to use hollows. So hollows, when we see a green and a red, you're going to notice that some of these reds are hollow. Some of the greens are solid. Some of the reds are solid. Some of the greens are hollow. All that it means is that a hollow candle means that we had upward movement from open to close of that candle. And a solid candle means we had downward movement from open to close of that candle. The green or the red means it was up or down compared to the prior close of the last candle. So on a daily chart, that's where I find more use here. We could have a day where the market trends down, but it might have opened up because of pre-market news. There could have been earnings reports. There could have been some big news, economic reports that in pre-market or overnight, big news sent the markets up or down. And so I want to know if we have a solid green indicated by this right here, like technically, yes, we were up above, or we were green on this day compared to the prior day, but we had a huge day of downside indicated by the solid body, which on a solid candle, we open at the top and we close at the bottom of that thick body on a solid. When we're looking at hollow candles versus solid candles on a hollow chart, we had a big downside day. That's what I want to see, because it tells me that even though it was green compared to the prior day, there was steady selling pressure. And in this case, what we end up seeing was further selling pressure. So it gave us a better picture of what may be coming throughout that sell-off. Now, of course, you can kind of pull that same data from regular candlesticks, but for me, it just helps me visualize it a bit better. So again, hollow greens, let's just go through hollow greens. We'll go through all the colors. Hollow green, what does a hollow green candle mean? Well, a hollow green means that we open up at the bottom of the hollow green and we close at the top of the hollow green. The wicks mean the same thing. The bottom of the wick means the lowest price point that stock traded that day. The top of the wick means the highest price point that that stock traded on that given day, okay? Same thing if it's red, or it doesn't matter if it's red or green, okay? That's the same. So we talked about what a hollow green, what about a hollow red? A hollow red means that we were still up from open to close. And the bottom of the body of the hollow red was our opening price, and the top of the body of the hollow red was our closing price. The reason why it's red is because the closing price of this candle, for example, this last one right here, the closing price of this candle was still below the closing price of the prior candlestick. So we usually have a gap down, we open substantially lower, and then kind of inch our way back up by the end of the day, but not high enough to be above the close of the prior candle. That's what that means. Solid green, we open at the top, we close at the bottom of the solid body part, but we were still up compared to the closing of the prior day, okay? And then solid red is similar, where we open at the top of the solid part of the red candle, close at the bottom of the solid part, and we were red, we were down compared to the prior close of the prior day, okay? That, my friends, is candlesticks in a nutshell. So now we've got the framework. Now we have an ability to look at candlestick charts and to pull more information out of them than just the lines, okay? And that's key. Do we need to do them? No, but if you find more value there and you're able to pull more information out and it's helpful to you, great. It's all about what's helpful to you. I'm not going to sit here and tell you guys, you got to follow me and do this. You don't. I hope that this can be a great video to give you the information that you need to ultimately go out and make your own decisions, because you realize that this is better for you. Like, that's what it's all about. It's not about me and you and me. This is better than this. When it comes to trading, guys, and analyzing the market, there's so much, and these days in social media, there's so much influence out there. There really is. But a lot of it is a distraction from you and from what you need to do yourself, really, is what it comes down to. So we covered time frames, we covered candlesticks. Now we'll get into the meat of charting stocks. This is where it gets fun. So first things first, let's talk about volume. On the bottom of our screen, I got volume pulled up. I have as one of my indicators right here, volume, okay? So most platforms will kind of automatically put this up, or if you have to add it as an indicator, you have to go add it as an indicator yourself. What I'm looking for, okay, is volume, and I'm looking for bigger spikes, more sustained volume moves, downtrends in volume, and that's what I want to see. Now, the green versus red means, okay, we were up on this day versus down. You don't need to have colors to your volume, to be honest, but it could be useful in how you visualize things. What you're looking at is this: changes. Can we get trends in volume? Can we see something here? Okay. When we are selling off aggressively and volume is super, super high, that tells us that we've got some sort of capitulation event, which means people are giving up, people are selling stocks, they're panicking, there's fear, they're like, oh my gosh, what the heck's going on? And that could spike volume. It could spike off of news. There's big time news about something going on right now, and that could spike volume. It could signal a lot of buyers or sellers into a given stock because it's good or bad news, perceived, right, as good or bad. What we're looking for, though, is trends. Now, what we noticed right here is that in 2022, here's the beginning of 2022, okay? We had higher volume that slowly kind of just like overall trickled off, okay? And that volume really trickles off as we get into July, August. Now, that was the summer months, but that volume really was like super, super low here into August. Note that the market was pushing up to highs. And so what we're looking for here is when we have volume, but it's not high volume, and we're getting a serious, substantial move, that tells us that potentially we might not have a lot of conviction behind this move. Market participants are not buying this move. They don't believe this move. It's on low volume, okay? Now, if we had all of a sudden a couple of high volume days, and the market compared to what we saw here July, August, and the market went higher, then it starts to say, hey, the market's potentially buying this move a bit more, right? And it gives more meaning to that. In this case, the market was not buying this move, and what ended up happening was we started seeing an increase in volume the next couple of weeks, and guess what? A reversal back to the downside. So that's what we like to use volume for. What's happening lately? Are we seeing high volume, low volume? And then can we build trends off of that? Can we match up current trends in the price and current trends in volume? If we see low volume, or we see volume kind of, steadily around whatever level it is, and then all of a sudden a big volume day, and it's a big green day or a big red day, that gives you some more conviction behind that move, maybe continuing over the coming minutes, hours, days, depending upon the time frame that you're looking at. Okay? There's also things called exhaustion volume, and that's something to pay attention to as well, where you have a big move in volume to the upside, for example, and then the stock or whatever you're looking at doesn't make a substantial move in either direction. And that could kind of be seen as exhaustion volume, where we have high volume coming in, but the stock didn't really move up. Let's say it was trending up, but it just didn't really move up much more on that high volume. That could signal that we might be exhausting buyers, and the flip side for sellers, and we could be getting ready to reverse. That's taking it a bit further, but bigger picture, volume precedes price, and that's what you want to be paying attention to, okay? So keep that in mind. And one last example here, guys, will be a perfect shot. Look at this. The highest volume day on the Dow right here came on October 13th. It happened to be a day where we had the CPI report back then for the month of September in the month of October. So there's a big economic report there as well. But it just so happens that that day now holds the highest volume trading day on the Dow of the past couple of months that we're looking at. And what did it signal? Big reversal, big green candlestick, and a lot more upside to come. So volume preceding price, that's a good example where even though, right, on that day it was a huge up day, and you're like, oh man, I missed the bottom, we still had a lot more upside to go, and we're still up substantially from that, even though it was a few months ago. So hopefully now you get a good picture of volume. The next thing that we want to talk about after we talk about volume is going to be support resistance. Then we'll get into indicators, okay? So now let's talk about drawing in support and resistance. So everyone talks about, support, there's strong resistance there, but how do you identify that stuff? There's a bunch of techniques, and it really comes down to what technique fits your style for how you identify that. But what we're going to teach you is what we call the 3-touch technique, okay? And then, of course, we'll talk about key levels as well, because that's an aspect or a component to support and resistance. Because the stock doesn't have to stick to certain rules. It could do whatever it wants to do. And a lot of people get caught up in being too harsh on specifics to the cent, to the exact spot, right? And the market doesn't always work that perfectly. We can overshoot, we can undershoot, right? Specific support resistance levels. Okay, so let's start with horizontal. So what we want to do is we want to start to develop a way to identify horizontal support resistance. You can see this key levels. We're going to look at this as horizontal support resistance because there are going to be multiple touches to our horizontal line, okay? So I'm going to pull up the horizontal line tool when I draw my horizontal lines, and you can kind of see how it looks. I can also adjust as to where it's going to go. I'm going to leave it up here, and we'll bring it down to a spot that we want to look at. Okay, we're looking at the 1-year, 1-day chart on the Dow. This can work under any time frame. You don't have to say, oh my gosh, they use the 1-year, 1-day. I got to look at. No, you can. It doesn't matter. Any time frame will do. It's not the end of the world if it's not. If it's a different time frame. So I'm going to look at some individual periods, and I'm going to say, oh, look at this. Let me just bring my line down because I lost them up here. I'm going to bring this down, and if I was looking at this chart and I noticed in this area, look at this, we have a lot of candlesticks that are coming up, just not breaking out over this. On the right, it says around this 332.80-ish area, 332 or 333, something along those lines. I'm going to bring this down. I'm going to see if I can connect at least 3 candlesticks, and I can. So where I can connect at least 3, I'm going to find a valid area of support or resistance. In this case, resistance because, why? In this case, resistance because we are not able to push higher, okay, above that level. I can also find one right here. Look at this. There's a bunch of candlesticks right here that are all rejecting at this exact spot right here. That's resistance, okay? Now, it's not always going to be 3 touches, 3 specific spots, perfect. There's things called double tops where 2 candlesticks get up to a spot and reject at the same spot, and that's classically seen as resistance as well, or double bottom support, right? It's not perfect, but we want to find a spot where we don't just have one candlestick. We want to see multiple. And many times you have to zoom out and see if that was an area that we had multiple touches. And if I zoom out on this chart, what I'm going to notice is that's actually really funny, because not only is this area a resistance right here, as I zoom out and look to the right, this area also acted as resistance right here about a few months later. This is back here in early June, and this is late August. So these levels are very useful later on. And another thing to also note is that sometimes, and many times, prior support becomes resistance and vice versa. So as I zoom out even further, what do you guys notice? That, okay, we had some reactions. We broke above here, fell back below, couldn't break back above, came back up, couldn't really break back above this. But then once we did, what do we find? Look at all these candlesticks holding above this area that acted as a prior resistance, now turned to support. And then now look at this, prior support, guess what? It's now resistance. So this one area that I found to be resistance back in June, early June of 2022, 6 months later, is still a valid area of resistance now. Now, of course, price action goes ebbs and flows. Eventually, you're going to have moves above and below, but it's still acting, at least in the short term, as an area of resistance. So what's important to take away from this is that when you find areas where multiple candlesticks can't get above or below, that's a valid support or resistance. In this case, we're looking at resistance. We'll talk about support here in a second. You can bring that line or put that horizontal line on your charts and extend it, and then watch how the market or how price reacts at that level again in the future. And it might be a really good piece that you can add to your arsenal, or an edge, as we call it, to have a better idea for where the market may go in the future. So keep that in mind. That right there is resistance, and we'll go with trend line resistance in a second as well. Now, what about support? Okay, when it comes to support, we can kind of look for similar things. Okay, and what we're going to notice is that if we're looking for support, you'll find it again. Actually, in the past couple of weeks, right around here, we actually have like 4 candlesticks, 4 of these wicks that all came down. What is it telling us? Right, buyers are stepping in right there. There are buyers here. Multiple candlesticks that are not going below a spot. Buyers, 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 support. There's not sellers that are strong enough to flush us through, okay? So those are valid levels to watch, and you can find that as you zoom back on the charts further. Now, on top of this, you might not find perfect 3 touches, 4 touches. You might see 2. You might see a stock that spikes up and then rejects. Those can be seen as key levels, okay? I want to see a stock that has multiple attempts to break a spot or to push higher and gets rejected, or multiple attempts to go lower and then bounces. I want to see that in terms of classifying my support resistance. There's also going to be swing highs and swing lows, and those can be classified by some of these recent relative highs that we see along the way and some of these recent relative lows that we see along the way. Are they always perfect areas of support with multiple candlesticks showing us support, clean, lines? No. But those are some relative levels that I might want to add my horizontal line down at some of these spots, okay? Because I know that these are some recent swing highs and swing lows, and if we get above some of these levels, that could be interesting, or at least helpful in identifying the potential direction of where the stock may go next. And so that's why I have those drawn in, where I've added those to my charts. Recent swing highs, recent swing lows, and then prior support and resistance areas, okay? Now, let's delete this chart and let's see if we can put in some trend lines, okay? Now, I'm gonna use my trend line tool, and trend lines, when we're looking at support or resistance, what we want to do is connect multiple tops of candles in a trend format. And in this case, here's where I like to use the 3-touch technique. I don't want to see 1 or 2 because it's not a super valid trend with just 2 touches. Once we have 3, potentially 4 or 5 touches to a line that has a slope, That's a pretty strong and valid trend in my opinion. So when we're looking for trend line support, I might look at this candlestick right here, see that it connects very, very nicely over the past couple of months. And check this out. So if I draw this in, right, as time was going on, I could have drawn into candlestick or a support line, trend line that had one touch right here, another touch here, another here, multiple there, and another here. That's 4+ touches to this line. That, my friends, is a valid trend line support in an uptrending case. You can have downtrending support. It's more so bottom of a channel type of a look. But for the most part, when we're looking at trend line support resistance, the most useful are going to be uptrending support and then downtrending resistance. And when we break these patterns, we have the potential to go a lot lower or a lot higher. And nothing is guaranteed in the stock market, but we have the potential and a technical perspective. And from a technical perspective, which also doesn't line up many times with fundamentals, because fundamentally there's a reason why things are moving, but at the same time we have a technical break, and it all comes down to psychology and sentiment and where people feel that this is a good buy versus a good sell. That's why trend lines are formed, okay? But that's a valid trend line. So now we have a picture of how we can draw trend lines in, okay? Now, let's see if we can find a trend line resistance, in this case, a downtrending slope. If I was to connect this top and I was to connect this top right here, it's close. It's not perfect, but I get something like this. And what do you see? We had a touch right here, slight overshoot touch right here. And of course, it's not perfect. And in the next video, we'll recover technical analysis for beginners. We're going to touch deeper and dive deeper into supply and demand. And when you have a good feel for understanding supply and demand, you're going to be able to minimize the effects that errors like this on trends are going to give you. Because the way I see it and the way the market works, it doesn't care about your trend line that you drew, because your trend line that you drew could be slightly different than mine and somebody else's, you know? And so it doesn't necessarily matter to the cent what my trend line is. It more so matters what happens now in this area. Are we going to get a reaction in this area in a given time span that is a rejection or a breakout or a breakdown? So in this case, we broke above that trend line barely, okay? And then we couldn't continue. We could not get continuation. Did not happen. And we fell back below. That tells me, okay, this area is still a valid area. We also came up and touched this level again, had a slight pullback, and then eventually broke through. And now, guys, when we talk about prior support becoming resistance and prior resistance becoming support, this was a prior resistance. What is it now? For right now, we've got a prior resistance turn support. So our breakout trend line, we broke above this trend line, nice upside. Now we're pulling back and we're holding that as support. If we keep going higher, that is a very nice trade potentially to the upside on the Dow. So that is what we're looking for, and never perfectly has to work. But this is going to give us a good picture, big picture view of what's happening, where the market's trending, and what are the key spots to watch in terms of invalidating the trends that we're seeing in the market right now. That's what it's all about. You identify a trend, it's valid until proven otherwise. When proven otherwise, move on. You can look for other trends. Maybe you're seeing something else. Maybe there's a different stock you want to go look at that you see a nicer trend, and you can move on. But that's what it's all about. So hopefully this makes some sense. And obviously time will go on and we'll play out. We got a decent, move to the upside here already, from that break of that trend line. So it offered some good opportunity. But just like the same situation happened here, if I was to zoom back in and extend this line, once this trend line stopped holding, right, we did break back up underneath it, but it ended up indicating a lot more downside to go. This trend line that was holding for about 6+ months, about 6 months or so. Once it broke and was no longer valid, we ended up in a bigger picture downtrend. So it's useful to kind of see that and to use that to give you a bigger picture view of what's happening in a stock or, intraday or, intra-year and whatnot. Okay, is that all I wanted to cover there from when it comes down to? Yes, that is what it comes down to. So if you haven't seen it or you want to take it a step further, and you want to dive into supply and demand, which is, I think, a superior version of support and resistance, there will be a video on the channel covering technical analysis for beginners. And in that video, we will cover supply and demand towards the end. We will cover supply and demand in much more depth, okay, if you want to learn more about that. But this is giving you a good framework to build off of as it is now, right? Last but not least, let's talk about indicators. I'm not a humongous indicator fan, and there are some indicators on the chart. Well, there's one on the chart right now, which is on the right-hand side. If you're wondering what this is the volume profile. There's a video on the channel actually already covering the volume profile on TradingView, how to get my settings and all that stuff if you want to follow that and get a base for that. I don't necessarily think that it's super useful to have a million indicators on my chart. I try to keep it pretty clean. So the ones that I like to use are the 50 period and the 200 period moving average. And if you looked at past videos, or if you've seen a recent video, I think we had a FinViz a tutorial video. And in that video, you'll notice that they talk about, or FinViz uses the 50 period moving average, the 200 moving average. They're seen as pretty good indicators for like direction and for sentiment right now in the market. And so the blue line is that 50 period moving average. It takes an average of the past 50 trading days or 50 candles, and it gives you a where that average is going to be. And then the 200, it just tells you where are we right now compared to where we've been the past 50, 200 days, or you can make it any number of days you want. Do you want to make it 10, 20, 100? It's up to you. These are kind of like industry standard, indicators. But taking it a step further, what do I like to use? What are some of my favorite indicators when it comes to the short term? This is like the big picture. What about the short term? Because big picture to me, it's trend lines. It's the 50 period moving average. It's the 200. I don't put too much weight behind them, but it's trend lines, it's support, resistance, those key levels, the swing highs, the swing lows, those inflection points we've been seeing some big action or big reversals off of over the past, days, weeks, months, minutes, if I'm looking at short-term time frames. If I go to the 5-minute chart, what do you see? A white line. That is the VWAP, the volume weighted average price, okay? This is one of my favorite indicators for a short-term, for intraday. If I was to go to, let's say, Apple, okay? What do we notice on Apple? It's not perfect, as no indicator is. But this past couple of days, we noticed that when Apple fell below this white line, back here on this day right here that I'm circling the top of, we continue to see downward pressure throughout the day. This day right here, okay, that I'm looking at now, when Apple got above that white line, we generally were uptrending. So the volume weighted average price is essentially what it says, what it is. VWAP is the volume weighted average price. So if we see a lot of volume at a price, that's going to hold more weight into building that average out. And as time goes on, that volume weighted average price slows down its motion unless some super crazy high volume comes in out of nowhere as time goes on, because we're kind of building up. We've got a lot of volume already traded, and that starts to slow down. So it's like the stage is set the first couple hours of the day, and then it's like it's not moving too much unless there's a big reversal, right? So I love that to gauge sentiment and to be an area that could act as support and resistance intraday as an indicator. And so again, in this case, Apple got up to that level and then rejected. That acted as resistance. Apple here held above it or bounced at that level. That was support. So we kind of can see that it's very useful intraday. Now, it's not perfect, and there's a lot of times fake outs where we get moves above, below. So I would recommend is you utilize the VWAP intraday for what's happening right now, what's happening today. And when a stock comes up from below and is going to test the VWAP, there's no reason to start putting in shorts before you have any confirmation. Wait, give it a 5-minute candlestick. Let it test the VWAP, let it get there, and then start to reverse. And then as it starts to reverse, now we're rejecting it. We can take a trade to the short side potentially, and our stop loss is above where it rejected, right? It's going to be a much higher probability trade if you do that versus just saying, oh, we're coming up to VWAP. I'm going to put a short on now, even though we still might have a little more room to go. Let it hit the level. Let it tell you what it wants to do before you take a position. And that's when it comes, that goes into more of the trading side of things, which is for another video altogether. And we'll build off of this further in the technical analysis for beginners video that we're going to have out very, very shortly, if not already out on the channel. So again, this platform that we're using right here is TradingView. If you want to follow along, use a similar platform to do all your drawing and stuff, that's TradingView. We'll leave a link to that in the video description box and pinned comment down below. There'll also be some other links and resources down there as well. There's even a webinar covering a couple of different trading signals that you might want to add to your arsenal. So I would highly recommend you check out the technical analysis video. And if you want to go even further, that could be a great use. That free webinar linked up down below as well. Make sure you are subscribed, hit that thumbs up button, share this video with a friend. I want to have this channel as like an amazing free resource that you can come to, learn what you need to learn, and then move on your own and do what you got to do based off what you learn here. If you've got questions, leave them in the comment section down below. Happy to see you guys in a future video. Have a great rest of your day.